Gold and silver prices are driven higher on multiple factors. Join us as we explore the near-term outlook for precious metals this week. Hi, and welcome to Minuteman Precious Metals, where it's my goal to enhance your financial preparation and prosperity and motivate you by tracking my personal stacking adventure. Thanks to all my new and returning viewers. Please like and subscribe if you enjoy today's content, and ring that bell if you'd like to be alerted when new videos are available. I appreciate your views, but I really need your likes and subscriptions to grow this channel. Thank you for your support.
Gold and silver prices rose substantially in overnight trading and continue to do so in morning trading today. We will explore the 5 factors driving markets as we kick off this week. Today is Monday, May 6th, and gold and silver prices are up sharply, with gold up $23.79 or 1.03% to $2,325, and silver is up 71 cents or 2.69% to $27.26 at the recording of this video. There are several factors driving prices higher this morning. The first are economic factors as we open to a softer US dollar after a weaker than expected jobs report revived expectations that the Federal Reserve will cut interest rates this year. On Friday, we saw a drop in the new job creation in the United States, a slowdown more than predicted, and wage growth, which also slowed down. This creates some space for the Fed to start cutting rates in 2024. The US dollar dipped to its lowest level in about a month after the employment report revealed US job growth via the US non-farm payrolls slowed more than expected in April, and the increase in annual wages fell below 4% for the first time in nearly 3 years. This data impacted our second factor, the possibility of lower interest rates. As the likelihood of a September rate cut increased to 71% on the news, per the CME FedWatch tool, lower interest rates reduce the opportunity cost of holding gold. Let's get this in focus. Doesn't want to cooperate. And holding silver. And it further weighs on the value of the US dollar. Fed officials are scheduled to deliver public speeches this week, and stackers should stay tuned for further insights on the Fed's monetary policy trajectory. Those always weigh heavily on markets. This rally was built on the idea of 4 interest rate cuts this year. We're still in a bull market, but we've pulled back as those interest rates haven't materialized. We're seeing the possibility of those happening again. The third major factor affecting bullion prices today is Chinese demand. The Chinese Precious Metals Index produced data that shows they remain in expansive territory, supporting the outlook for a key market for gold. A fourth factor is central bank acquisitions. Those central bank acquisitions remain a net positive currently. According to data from the World Gold Council, tracks central bank acquisitions of gold in March, buying showed a net positive of 15 tons for central banks, who have become one of the largest consumers of gold in recent years. The figure was in line with previous months, keeping the positive trend in demand alive. Lastly, geopolitical issues are rising their head again in the Middle East. Tensions have been put on a spotlight as Israel's military called on Palestine's civilians to evacuate Rafah as part of a limited scope operations. Markets do look very bullish today as these multiple factors are pushing metals higher. Of course, we know that the markets could easily swing back in the other direction based off those upcoming Fed Reserve speeches scheduled this week. Stay tuned for more information as we work through the week.
Let's call it there. Thank you for watching, and remember, time is your most valuable asset, and I appreciate you sharing yours with me. Minuteman 6, signing off.